Hi, I'm Phil Town for Rule 1 Investing. Thanks for joining us. This is going to be a Q&A, so let's begin.
David from Facebook asked, what are some ways to minimize capital gains taxes and broker commissions which have a negative impact on us small guys who are starting out with a small bankroll? Thanks, Phil.
All right, David, we definitely are impacted by taxation and commissions, and the smaller we are, the more those things impact us. You've got that right. The impact of taxes and commissions on the little guy are big. Now, first thing to understand about commissions is that they're usually pretty much a flat commission. So the more stock you buy, typically for an amateur investor, the less you're paying per share in a commission. So that's kind of an advantage to the big guy, right? Of course, if you're a big guy, if you're actually running a fund like I am, they charge you on pretty much a per share basis anyway. So the real advantage to a small investor is that if you've got enough money where the impact of the commission is very small, that's really good. So 100,000, 50,000, something like that. Now, if you're working with $1,000, like I was when I started, then the commission can be really huge, right? I mean, if you're paying, it's $9 and you've just bought $1,000 worth of stock, that's like a full point commission, 1%. So that stock has to go up 2% just for you to break even, right? If you were to sell it because you've got 1% going in and 1% coming out, dang, you got a 2%, weight on your shoulders there. They call that friction in the industry. And that friction can tear away a lot of our profits, especially for the little guy. So the first thing to understand is you're starting out with a small bankroll. You have to focus on just a small number of businesses. Now, already even the best big investors focus on a small number of businesses. I mean, Buffett's got, 70% of his money in 5 or 6 stocks. So you've really got to focus on a small number, which for a very small investor means one company. So if you're doing $1,000, you got to focus on one company, okay? And then just really, really make sure that's well within your canyon. And that will restrict brokerage commissions. And also, you don't want to be dancing in and out of that company as a little guy. You want to be going in, and you want to be going in for the long term. So again, you're reducing brokerage commissions. Now, the other reason to stay in it for the long run is because capital gains tax reduces your tax bracket from the maximum brackets, which for me are like 43%, down to a 20% bracket. And may even in some cases be as low as 15%. Now that's really good, but think about this. If you're a real small investor and you don't have to pay a lot of taxes anyway, then it doesn't matter. So you just got to make sure you understand what's your tax bracket. If you're in a bracket where you're making pretty good money and you're paying pretty high taxes, then you're going to want to hold that stock for at least a year and 1 day in order to get the advantage of capital gains tax. If you're a small guy, you're not making a lot of money, you're not paying taxes at all, which was certainly the case that I was in when I first started, then the impact on those taxes is of selling the company is going to be negligible, right? You're going to pay very little tax on it. So in that case, you simply invest and go in when it's really cheap, get out when it gets really expensive. Now, in general, however, follow these rules. We're going to be sure we stay rational, we get involved with companies we understand very, very well. We got to tie our values to the company, so make sure we really like the company. Make sure there's an event that's driven it down, right, way down in price, and then make sure you understand how to reduce the basis as that goes along using dividends and derivatives and buybacks. So follow through all of those, and then ideally, when you buy a company, you pay commission one time going in, and you just keep it for the rest of your life. That would be perfect. So thanks for watching this video, you guys, and participating in the Q&A. I love doing this stuff with you guys. Want to continue the conversation. So tell me, what's the single biggest insight you're taking away from today's video? And more important, what step can you take right now from what you just learned? And leave a comment right there and let me know, and that can generate more conversation. I'm Phil Town. Time to go play. See ya.